I'm Alex Pugh. I'm the reporter at FinTech Futures. I'm at Sibos 2022. Hi, Sarah.
Hi, Alex.
Do you want to introduce yourself?
I'm Sara Castellano, and I come from JP Morgan, where I look after the EMEA Payments and Commerce Solutions product organization.
Fantastic. So first question, across the 13 countries and 120 currencies that you manage, can you drill down into some of the trends that you're witnessing that you think might have a wider, broader influence on the global payments landscape?
Absolutely, and that looks after, so that's essentially my remit in Europe, Middle East, and Africa. So that is our footprint. If you look at JP Morgan globally, we're operating in much more from a footprint perspective, and we move $9.7 trillion a day.
Wow.
So if I double click down onto EMEA and the countries that I look after, I've seen multiple trends. I would start with one of the hot topics we're discussing here at Sibos, which is ISO 20022 XML. What is that? It's that financial market infrastructure, central banks, payment systems around the world are upgrading their payments architecture to have enriched communication methods. So today, most of the banks speak to each other sending SWIFT messages or domestic type transactions. Sometimes they're their own country-specific file format. So what has come out is that all the financial market infrastructures are upgrading to use ISO 20022 XML, which is a way to send enriched data on a transaction. Often what happens is a transaction moves and then data moves outside of that transaction.
Separately.
Exactly, which causes a lot of reconcilement for corporates and financial institutions around the world. And SWIFT has been very successful connecting banks since the 1970s in their communication channel. What we've seen is that the current communication channel, which is called MX, MT, essentially has limited fields in it because it started based off of a telex.
Right.
It was like a postcard.
Different era.
Exactly. And now we're looking at enriched data, like sending video messages. We want more information around the transaction. So ISO is really exciting because the more information you can add in a transaction, the better it is for processing. And the beauty of ISO is it's structured data. So that structured data enables machines to read it better. Today in some of the SWIFT messages, it's free format text, and that's very difficult.
They struggle with that.
Exactly. So the machines can read structured data. That gives benefits to financial institutions and corporates around the world. And we're really excited. Cross-border payments go November of this year. We see euros under Target 2 moving. We have Bank of England upgrading. And it's very exciting that all the banks and all the central banks and financial market infrastructures are now going to speak to each other in a common language.
What kind of data, extra data, are you going to be able to get with these extra fields? What sort of things are...
So one of the ones that is structured that in the ISO tags is date of birth.
Okay.
And what's important about that is a lot of financial institutions, your number one goal is to help protect your customers from either fraud or just protect the financial industry and infrastructure from any sort of AML, any sort of money laundering things. So what you do is you ask to make sure I understand it's your bank account and it's really you.
Check your birthday.
I ask for your birth date, more information, and today often that's done via another means. So the transaction comes in, it gets stopped for a compliance check, we might have to go out back via an email or have a conversation asking that. Now you can put the date of birth in a secure transmission, and that enables clients and it enables banks to essentially read that information and know that that birthday is associated with the right person and that transaction can pass.
Great. So it's going to make it harder for criminals to launder money. It's going to make money more safe, more secure.
Exactly. It helps drive better data so that you can understand information better, and it helps protect the ecosystem. It also can put things in there like invoice numbers. So for corporates today, often they can't put an invoice number in their payment information. You probably send money today on your own app from a retail bank perspective, and there's not a lot of information you can put in that transaction. Actually, in the UK, it's limited to 18 characters.
Right.
Twitter message is longer than that.
Yeah.
You could put more information, so an invoice then matches the payment, and you can auto reconcile that. And there's an enormous amount of data fields that can be leveraged.
I was going to ask, has it been future-proofed? Because obviously you've come up against like the inability to add data, so that's why we've created these new fields. But are they anticipating data that we may need in the future, or trying to future-proof it? So it doesn't have to be revamped again in 20 years.
I think that by doing XML, it essentially enables more information to transfer, and you can continuously add in data fields. I think the future proofing is using structured fields and being prescriptive on global formatting standards rather than letting each individual country make its own standard. Then you end up with the ability not to understand the common language between each other.
They're incongruous. So now that we are in a post-pandemic world, that messy business of the pandemic is over, thank God. How do you think lockdowns and stimulus payments, COVID-19, have a lasting impact on payments in the world? Which trends are stuck and which do you think are going to fade away?
One of the biggest trends that I've seen over the last, during the pandemic and now post-pandemic, is the digital shift. And it's real movement to online ordering of groceries, online ordering of absolutely everything you need is essentially here to stay. And I think that what we've started to see is when you had the pandemic, there were a lot of supply chain issues and stops. And what we're seeing is a rise of marketplaces. So consumer goods companies are looking at creating their own marketplace. And that marketplace could be their goods, or it could be a third-party marketplace. So their goods and maybe an adjacent company. So think about a sporting athletic company that can sell shoes, but also brings in a protein shake company into their marketplace and really creates that direct-to-consumer experience. And that's not just in consumer goods. Consumer goods are the ones you think about. You can go on their website. That can evolve. We've seen it in every single industry. So the likes of pharmaceutical companies used to sell directly to a pharmacy. Now you can get a COVID test online and it comes directly to the consumer. You buy a car now, you can buy it on the internet rather than going to the dealership. And you can extrapolate that across so many different markets. And a lot of the corporates that I'm speaking to on a day-to-day basis, they're thinking about how do they create a marketplace and how do they kind of continuously evolve their experience, because they want to go directly, they can go directly to a consumer now. They don't have to sell through a distribution channel.
Cut out the middleman.
Exactly.
Does everyone benefit in that regard? It's probably the seller doesn't have to pay as much like fee or to the middleman, and the consumer benefits because the prices are reduced.
I think the one thing that the companies, the corporates we're speaking to, are really focused on brand loyalty. So
you can create loyalty programs.
They have loyalty programs. So you potentially run 1,000 miles in your sneakers and you can get an automatically new pair delivered to your house. You have a brand association versus just going into a store where you can pick 5 different types of shoes. That brand loyalty doesn't necessarily exist. Plus you can have programs where if you buy 5 coffees, you get the 6th one free, and all of that really starts driving the brand and the use. It's down to then the consumer coming back on a regular basis.
Creating a relationship.
Exactly.
So where are you seeing the biggest rise in transaction volume and transaction value increases? Is it in e-commerce, like we talked about, physical, digital stores, phygital, contactless, things like that? Where are you seeing the big spikes, big rises?
So one of the things that I've started to see actually gain traction and have an increase is real-time payments. So real-time payments starting from a smaller base, but they are gaining adoption around the world. And where we had, the US went live with USRTP after decades of not changing anything in the payment system. And we continuously see more clients onboarding to real-time payments in the US, and then more users actually sending cash through the bank rails.
Okay.
If we pivot here to Europe, something called SEPA Instant. SEPA Instant came out a couple of years ago. It's not mandated across Europe as of yet, although there's plans to do that. But consumers are starting to get comfortable paying with true bank transactions. And that becomes more of a reality when, if historically you were potentially getting cash for a transaction, now you can still have that same benefit, but it comes in a digital way right instantly into your bank account.
Right.
And it's quite exciting, especially here at Swift, at Sibos this week. They've been talking about cross-border instant payments. So not only the US has its rails, Europe has its rails, and they've worked with the TCH in the US, EBA here in Europe, plus Swift to create cross-border real-time payments, which is exciting because if we go back to 2010, the quickest way to move money was actually to fly it. Now you can essentially send transactions in seconds.
That's crazy. That was the fastest way to send money.
Yeah.
Wow. We talked a little bit about the USA there. There's a lot of innovation in the payment space, as we've covered, but there seems to be one outlier, the USA. The world's largest economy, home to Silicon Valley, Wall Street, but it's quite slow in its adoption of payment methods. I mean, in the UK we have contactless debit cards, chip and pin. Why do you think the US is so reluctant to ditch checks and cash and not adopt new technologies?
I actually think the US is adopting. I think the example on real-time payments is becoming more of a reality. I do think that there is a generational trend with checks, and the US basically images their checks, so it becomes a little bit less paper-based. You can actually take a photo of your check and it goes right into your online app. So as generations switch and real-time payments become more adopted, I do think that checks will continue to decline, but I don't think that this is something that will happen overnight because there is still a lot of paper in the wider system.
Yeah. So most of the world, particularly in the developed nations, is inching towards cashless. Aside from the impacts on privacy and financial inclusion, how will that impact your business?
So I am a strong believer of access to cash because I do believe you can't go 100% digital because there are a subset of the population that are unable to potentially have a phone or be able to handle traditional banking. So I do think access to cash is something that in the UK, there's government initiatives and a lot of focus on making sure the vulnerable population has access to cash. From a JP Morgan perspective, we support clients of all different sizes and shapes, predominantly in the US, but also in the UK. So it is important for us to have that end-to-end offering, but we are seeing less cash and checks in the corporate space. So where corporates potentially were using cash for their use cases, whether it's to pay extras on a movie set or just cash having in the local office, that's not as dominant anymore. So being able to provide access to real-time payments or merchant acquiring services are more important than having that physical cash anymore.
Right. Thank you so much for coming, Sarah, and doing the interview.
Great. Thanks for having me.
Thank you so much. Cheers.